Daniel, thank you so much for having us. Welcome, everyone. Um, we understand that this is a pretty hot topic. There's been a lot of interest, and a lot of you are here. So we appreciate you taking out time during your day, during your evening, to come learn more about figuring out student loans with all the changes that are happening with the Grad Plus. We'll, me and Corey, we're going to chat through this. Before we get into it, I'll put up a quick disclaimer. At the end of the day, this is information, but if you have professionals in your life, you should be talking to those professionals. We're not here to give you like direct investment advice or tax advice, things of that nature. Also, nothing we discuss in this presentation should be viewed as like we are telling a specific person, like, hey, you will be eligible for a certain loan. We'll chat about eligibility criteria and such, but ultimately each lender has their own criteria that they evaluate in their own way. Okay. And finally, we like to share like we are not a lender, right? And but at the end of the day, no one um, is recommending any specific lender in this discussion, right? We'll talk about different types of lenders. Usually, we don't even name any lenders, but they might come up, and if that's the case, that's fine. But um, we are discussing concepts, not specific lenders. Okay. So we'll chat about, we'll give you a quick background on ourselves. We'll chat through federal loan changes, what's happening, and really what's happened at this point. Then it'll segue into how private student loans work. I think a lot of people are now curious about it because they feel forced into it, perhaps. We'll talk about the work Juno has done to improve the situation. And then we'll go through sort of screenshots of what the process looks like to get student loans, all the options you'll see with related to student loans, and how to navigate selecting between all of those options. A lot of value tends to come there. And like I said, we are happy to spend as much time as you'd like on Q&A. Please feel to add questions here into the chat. We're also happy to have one-on-one discussions later on. We can schedule time for more, detailed questions that are more particular to your specific situation that might not be covered more broadly. So we're here to help, and there's no cost to any of this. Okay. So who are we? Cody, you want to share your background and then I'll share my background?
Yeah, absolutely. So I come from a non-traditional background, like both of us do when it comes to the student loan industry. Formerly worked in sales and operations before this, but I spent the last 4 years helping my wife figure out how to finance pharmacy school. She's now a PGY1 pharmacy resident and transitioning to being a PGY2 pharmacy resident into this month. So I know all there is to know from the spouse side about financing pharmacy school, and that's one of the reasons I wanted to jump in here at Juno was to help students figure that out and shed a little light on the changes that are going on at the federal level and help students, be able to afford pharmacy school. So,
I usually introduce myself as the guy who has no business being in the student loan industry. I started out as an aerospace engineer, spent 6 years at Boeing doing aerospace engineering, went to get my MBA. And in the process of getting my MBA, I was like, man, these loans are expensive. Started Juno as a way to try and get more affordable loans for myself and my classmates. And then for the last 8 years, all I've been doing is negotiating mostly graduate um, student loans. Okay, so that's kind of, in a weird way, prepared me to be helpful in the situation we find ourselves in right now. Um, so, as a general concept, Juno, what does Juno do? So, typically outside of Juno, each person might go to various lenders and try to find out, like, hey, which lender is willing to offer me the most attractive option? What Juno does is we get together large groups of people, and then we go to all of those same lenders and some maybe you've not heard of, and we try to negotiate an option that's better than what they offer on their own websites. And the goal is really to get something that's better than anyone is getting when they go shop around by themselves. But ultimately, from your perspective, it's really just one more option that you can check. And we feel confident it's going to be one of your best options. Okay. So we'll talk about that more later, but that's just the concept behind Juno and how Juno works. So far, we've helped Ton of students, over $1.2 billion in student loans at low rates. Most of them more affordable from an interest rate perspective than federal student loans. We'll chat about why federal student loans are great, and it's not just the interest rate; there are other reasons. But that's kind of what Juno has done historically. Okay, so let's chat about the stuff that's changing and who might be impacted by those changes. Um, so before July 1st, 2026, right? So before this year, coming up in a month, um, students could access really the full cost of attendance that is published by the school through the federal student loan programs. There was the federal unsubsidized program that allowed you to borrow up to 33,000 for a graduate level pharmacy program, and then the Grad Plus covered anything above 33,000. This was a good system that's worked for many, many years. But as the title kind of suggests, it is coming to an end effectively now. And so let's talk about that transition, right? There are going to be some people, um, particularly mostly current students, right? They are going to continue to keep their eligibility in the old system. That means they're still going to have access to up to cost of attendance funding through the federal loan programs. But incoming students, particularly, are extremely unlikely to have that situation. There might be some programs who've, adjusted things just to get in front of the cutoff, and maybe a few students would meet that. Speak to your financial aid office to check if they might have done something like that. But for the most part, what we find is incoming students this year are unlikely to qualify for the old rules. There's also a second group of students, current students, that we are concerned about, let's say. They are students who are moving from perhaps undergrad classification to a grad classification in a pharmacy, in a continued pharmacy program, right? So um, essentially if the program is changing, right, even if the institution is not, and if it's just the program that's changing, you're basically an incoming student into the new program, and that would trigger the new system as opposed to the old system. Okay, now let's talk about the what the new system is, right? Essentially, the unsubsidized loan, previously you could borrow up to 33,000. Now you'll be able to borrow a little bit more, up to 50,000, right? So you're getting a small increase in the amount you are able to borrow from the federal unsubsidized program. However, the federal Grad Plus program is no longer available to the incoming students at this point of time. So what students are typically needing to do is turn to the private market to fill that gap, right? And we kind of took a stab at like estimating what that gap looks like, and obviously it's different per person. There's no way to like put an average out there and it be meaningful to each person. Every person is going to have a different cost of attendance, different savings, etc. But on general, $75,000 per year cost of attendance for a pharmacy school is not unusual. And if you're able to borrow $50,000 through the federal unsubsidized program, that leaves $25,000, unfunded, unless you're able to get it through savings or income if you have a job in parallel, or private loans. Yeah. So the other thing I'll just lightly touch upon is there are some changes to the repayment plans as well. This is not something most current students or incoming students are thinking deeply about right now, but the federal, you know, repayment plans are also changing, and happy to talk about those in depth for those who want to discuss repayment strategies of federal or private loans. Whitney, I see that your hand is raised. Could you share your question through the Q&A channel? Okay. So So what does this look like over a period of say 4 years, right? This is not an unusual length for a pharmacy program. You might borrow $50,000 from the federal program, $25,000 from a private lender, and you end up with $75,000 at the end of your first year. This process sort of repeats, and by year four, you have about $200,000 of federal borrowing plus another $100,000 of private borrowing. What's not really shown in this picture here is there's also interest that's accrued on top of that. Both your federal and your private loans for grad programs, they all accrue interest even while you're in school, even if payments are not required while you're in school. Okay. So that's just something to keep in mind that interest is accruing. Great. Let me pause there. Um, Corey, anything we should address? So I skipped.
There was just a quick question in the it came through the chat. It's the $50,000 that can be borrowed annually, or is that the entire cap? That can be borrowed annually up to a $200,000 cap, which is what's showed here. So pharmacy students can borrow 50,000 per year.
Yeah, that is correct. So
Also to note on
through
the
federal.
yeah, through federal. To note as well on the students who may or may not be eligible when they are current students, and most of the time that's in 0 to 6 programs. So if you're in a continuous 0 to 6 or 3+4 or anything like that, just make sure that you know when you're changing from the undergrad to the grad, that is what we're talking about, or anytime that your classification changes in the school's database, essentially, that's when you will lose access to Grad Plus. But your financial aid office should have plenty of information on that.
Yeah, absolutely. If you're worried about that as a current student, reach out to your financial aid office like right after this call.
We had another question as well, Nikhil. It says, so even for the federal loans, interest begins at the beginning of the loan, not after graduation. Yes, from the time the loans are dispersed, that is when they will begin accruing interest.
Correct. Yeah. As soon as the loan disperses, that's the moment at which interest starts to accrue. That's true for both. Um, the only loan it's not true for is for undergraduate education for a federal subsidized loan. So not the federal unsubsidized loan, which is what many people have. There is a smaller program, the federal subsidized loan. The borrowing limits on that are pretty small, but that's the only one that doesn't accrue interest. That's a technicality, but it effectively does not accrue interest while you are in school. That gets subsidized. But all the other federal or private programs, they accrue interest while, once the loan is dispersed.
There's another question about the interest for the federal loans. I think we just went past that one.
Yeah.
But the rate this year for federal is 8.07%. And that is the Fed unsubsidized rate. And that is, they asked, is that set for all students or based on credit? The federal rate is set for the students across the board. That rate is.
Correct. All students, regardless of credit, will get the same interest rate from the federal unsubsidized program. For private student loans, we'll get into it later, but some students will get rates better than the federal loans. Some students will get rates worse than the federal loans. But that truly depends on credit. Yeah.
There's a couple more questions, Nikhil, as well. Since we are considered undergrad for the first 2 years of a 0 to 6, are we no longer eligible to use the rest of our federal student loans for undergrad? As far as I know, that's correct. When you change programs, you will lose access to anything that you had before that. For example, any undergrad funding you will not be able to use for a graduate program, even though you didn't use it all in undergrad.
Correct. Yeah, it's a fresh set of requirements, basically. Yeah.
There's one more question as well. It says they mentioned something about the limit being 200,000. Who qualifies for that? That is any student who is under this new cap that's on the screen now. So if you are starting your program in July 1st of 2026 or later, or you change programs, you are eligible for that 200,000 cap at 50,000 per year maximum.
Yeah.
So even if you're a 3-year program, then you would only get access to 150. It's a 50,000 per year limit with a total limit of 200,000.
All right. So if this was a 5-year program, for example, I don't know if there are any of those, but if this was a 5-year program, there would be nothing left for year five because you've already maxed out. Essentially, you have two limits. One is a lifetime limit, and one is a annual limit.
One more question just came in. Does undergrad loan debt affect receiving loans through Juno? Let you take that one, Nikhil.
Um, Effect is a good word. So undergrad student loan debt will be on your credit report, right? And Juno is a portal through which you potentially access private student loans. So I would say yes, right? The underwriting decisioning that lenders are doing are going to be taking a look at your credit report, and your credit report is going to be having those undergraduate student loans on it. So it does have a effect. I'll also add that it's not, private lenders understand that it's normal to take student loans, right? So it's not that if you have an undergrad student loan, it's like, oh, denied. It actually might be a good thing in some cases. We'll discuss eligibility criteria later, but sometimes just the fact that you took an undergrad student loan and you haven't had late payments, etc., on it, even if that's a result of not having any payments to make, that could be in your favor.
Yeah, there was one more question about the um, additional costs beyond tuition, but we'll cover a little bit of that later with the cost of attendance. And then one more question about eligibility. It says if I begin my PharmD program before July 1st of 2026 and receive federal aid for the summer term, will I be considered under the current federal loan rules or the new rules? If you're taking a loan before July 1st of 2026 and it is dispersed to you before that date, then you will be grandfathered in.
I would strongly, if you're on a boundary, speak to the financial aid office, right? Like that is the most important thing to do is speak to the financial aid office. If you feel like you're on a boundary, like, we can share the rules as we know them, but the financial aid office is the one who's going to tell you, yep, you're grandfathered in, or no, the new rules will apply from X date or whatever, right?
Yeah. They wanted to see if we can see that slide for repayment again. Yeah. The AGI for.
Yep.
It says, what is the monthly payment fee if your AGI is 100,000? I believe we have a slide later that covers a little bit about repayment, but we're happy to jump into that anytime as well and go into that a little more in depth with you individually as well.
Yeah, I'll share. We have a whole team at Juno who are literally the experts. I mean, they've had thousands of, most of their calendars are booked for, yeah, I think last month they had 400 plus one-on-one meetings. This month they're on track to have like 600 one-on-one meetings. So they do this a lot, right? What they are doing basically is meeting with you one-on-one, understanding your income, understanding your debt, federal, private, right? And coming up with a repayment plan that is quote unquote the best, right? Basically, how little can you pay, or aligning with the goals that you may have, um, using a combination of tools on the federal side as well as on the private side. So it's hard to, like, in a webinar, give a lot of good guidance on repayment. It's much easier to give a lot of good guidance on like how to take good student loans. It's much harder to say how to repay because we do customize that. It's hyper personal, is what I would say. Is that fair, Corey?
Yeah, definitely.
Um,
There
okay,
was
so
one more question just came in. It's about I know we've had this discussion before as well with students not seeing the full 50,000 on their FAFSA award, but if you want to cover that as well, I sort through
well,
this.
it's pretty much call up your financial aid office, right? We are seeing errors. This is a system in transition, and it's not unusual for us to hear about students seeing numbers that are not correct. At the same time, we also see very responsive financial aid offices that are able to um, tell you like, hey, that number is actually the correct number for XYZ reason, or B, fix it, right? So your financial aid office is your best point of contact if you're seeing a number less than 50,000 for your grad unsubsidized loan, right? If you're seeing 33,000, it might be related to uh, getting into the old program, but at, given today's date, it's more likely that it should be 50 for the unsubsidized, and there is some error that needs to be worked through. Okay, so private student loans. I think people are eager in some ways just based on the questions. So from a process perspective, if you're a current student, you've already done this. If you haven't done it with private loans, perhaps, but um, the process is relatively similar. We think about it as first you want to figure out how much you want to borrow, and for many students, this is as simple as this is the cost of attendance. This is how much I'm getting from the federal. The rest is how much I'm going to borrow from private. For other students, it might be more complicated if they have income or if they have savings or something else that's helping to assist, that they may not want to borrow all that much, right? And then the amount they borrow comes down. Um, Probably a good place to mention that you can't borrow more than the cost of attendance through any combination of federal or private student loans plus scholarships. Essentially, the way this works is anytime you're borrowing for a student loan, it goes through the financial aid office, and the financial aid office is keeping track of, okay, um, Corey is getting $10,000 in scholarships, $30,000 in private student loans, $50,000 in federal student loans. So that's it. If he tries to apply for anything additional, he's going above the cost of attendance, and therefore that's going to get denied, right? Or it's going to impact something else. So that's kind of how it works. I remember one of the questions in the pre-submitted questions we got was like, hey, what if I want to borrow more? What if I have a family? Things like that, right? Now, the school is allowed to adjust the cost of attendance. So the number you first receive, either in your financial aid award letter or on the school's website, think of that as a starting point. You can always go back to the school and say, hey, my cost of attendance is a little bit larger because I have a dependent, because I need a laptop, right? There are certain appeals that you can make that they will accept. There are others that they will not accept. So it is something you have to, make the case to for your financial aid office. But many financial aid offices are pretty reasonable about, adjusting the cost of attendance. And when they don't, it's not usually that they personally don't want to. It's usually more to do with like federal regulations and not wanting to go afoul of federal regulations. Okay. Well, actually, this was the slide that talks about that. So I'll pause maybe for a second on the slide, but hopefully that covers um, thoughts on that.
Yeah, we'd had several questions on cost of attendance come through. I knew we were going to get to this slide, but yeah, basically is how much you're allowed to borrow doesn't just include tuition and fees, it's the full amount. So for example, if your school's tuition is 50,000, they may have cost of living, obviously depends on where you're located, but it could be 80,000, for example. So you could have 30,000 for living expenses. But if you just Google your school and your program and cost of attendance, then it should come up. And if not, the financial aid office has that information.
Yeah. Or shoot us an email too. Sometimes we can navigate the sites a little bit and help you
Yeah.
find it. But yeah. Okay. So from a timeline perspective, we generally think of it as like, apply soon, apply early. There's no reason to wait. We had discussed like when does interest start to accrue, right? And interest starts to accrue when the loan disperses, not when you apply, not when you sign the dotted line saying like this is the loan I want. When the money actually goes to the school, that's the date on which interest starts to accrue. So you're not disadvantaged by applying sooner. If anything, there are advantages to applying sooner. A, you'll have confidence that like, hey, I figured out my loans. And B, if a better rate shows up, usually up to disbursement, you might be able to cancel the original loan you signed up for and switch to perhaps a better option that showed up. But you can't do the opposite, right? As in like, if interest rates increase, um, You can't say like, hey, I want yesterday's rate, right? That doesn't really work. So there's we can only think of good reasons to tackle this. Of course, you'll want to be sure about like where are you going to school, because during the application you'll have to fill out like the school's name. And generally you want to be reasonably confident about how much you want to borrow. If you're still waiting on a particular scholarship or something, it's okay to assume you're not going to get the scholarship and apply for a higher amount. And then if you get the scholarship, reduce the loan amount. Either the school will do that automatically if you're already borrowing up to the cost of attendance, or if that's not the case, then you can manually intervene, either cancel that loan or reach out to the lender and say, hey, I want to decrease it. Can you just decrease it on my behalf? And oftentimes they're able to coordinate with the school to do that. Okay. Um, cool. Let's talk about eligibility. Actually, before we anything else on like quick process kind of stuff? I know we'll get more detailed into process later, Corey, but anything you think we should be addressing before we jump into eligibility?
No, I think it's a good place to go ahead and jump in here on eligibility.
All right, cool. Um, so from eligibility perspective, US citizens, US permanent residents, and international students who have either a US citizen or a permanent resident as a cosigner, they tend to get, you know, uh, that tends to be a criteria that many lenders have. There are a handful of lenders that could work for students who don't meet that criteria. Reach out to us. We are happy to share all the knowledge we have about lenders that don't meet that provide loans that don't meet that criteria. Um, I'll just share that it tends to be expensive, right? For a international student without a US cosigner, for example, tends to be expensive. I will add for folks, for DACA recipients, they tend, mm, it's not as wide a bucket as what I just shared here, but there are, I would say better options than there are for internationals without a US cosigner, for example. The second thing, probably not surprising, is credit score. Many, if not all, lenders will have a cutoff. Those cutoffs tend to be around the 650 marks, somewhere between 650 and 680. So if a student has a credit score less than 650 or 680, or whatever the cutoff is for that particular lender, it's often okay if there's a cosigner. If the student wants to try to qualify by themselves without a cosigner, then the student themselves needs a credit score, that's above that 650, 680 threshold, right? Um, so the way I like to think about it is like winning score, right? Either the student by themselves needs to have a FICO better than say 650, or they need to have a cosigner who has that criteria. Right. The third thing lenders often look at is credit history, like how long have you had a credit history? And this is what I was mentioning. Like sometimes your undergrad student loans help you because by taking out that undergrad student loan, you started the clock on your credit history. Um, Most commonly, we see it's either a credit card that someone has opened or an undergraduate student loan. And that's establishing your credit history. And I use the word credit history, but there's many different ways lenders look at this. For example, some lenders will only count a credit card that's still open. Other lenders may only count a loan that's already entered repayment, right? So every lender has a little bit of a different flavor of how they think about credit history. But 2 to 4 years is sort of the threshold they want to see. And, usually a credit card and a student loan, one of those end up counting towards it. Um, Debt to income. This is the most challenging one, I would say. Right. So the good news is Juno has been able to talk to lenders and bring options forward that do not have this criteria whatsoever. Right. This is really what allows a lot of students who are going through Juno to get their student loans, even if the income they currently have is $0 or is relatively low. because the lenders are basically, thinking about it as like, okay, yeah, it's zero right now. They're a student, duh. Um, but they are pursuing um, higher education, and they should have a stronger income post graduation, right? So, but there are still plenty of lenders out there who have debt to income criteria, and what they are trying to evaluate is, compared to how much you're trying to borrow plus how much is already on your credit report, do you have a sufficient income to pay all of that, right? Um, and there's various formulas they use to calculate that.
It's
Finally,
a good
cosigner, and
question.
they, yeah, good.
So there's a good question that came in. It just came based on that last point. That's why I wanted to bring it up. It says it better to apply for the loan now while still working full time then, since there's the possibility of the debt to income.
Correct. I think there is a chance that you are eligible at more lenders if you apply right now while you're still working full time. I will clarify a couple of things. If you're working full time and you're about to quit, that's okay, right? That doesn't matter. What matters is, that you're working right now at the time that you submit the application. The income that you want to enter is your annualized income, right? So don't shortchange yourself. Like, let's say you're making $4,000 a month, right? You're going to enter 4,000 into 12, $48,000 as your income, even if you only plan to work 2 months this year and you're going to quit after that, right? So all that matters is what's your income right now, the annualized version of it. And really, if you have a pay stub to prove that, that's what they're going to ask for, right? Many lenders will say, hey, show me your most recent pay stub, or you show me your two more recent pay stubs. That's how they verify the income. Um, Cosigner. So this is what, if you're not able to meet the criteria by yourself, right? Oftentimes, students will involve a cosigner. Now, with federal student loans, you didn't have to do that. But with private student loans, that is the reality of things. Many students will have to invite a cosigner who meets the criteria, and as a result, the student and cosigner together get the loan. Um, from a rate, we've been focusing a lot on eligibility, but rates, all of these things can also impact interest rate, right? So yeah, that's just something to know. The timing of application. So we kind of mentioned earlier, we encourage folks to apply as soon as they are ready to apply, as soon as they know which school they're going to and how much they need to borrow. The reason is because rates can fluctuate over time. So if nothing has changed, your credit has stayed exactly the same, but just time passes, you know, interest rates can change up or down. So and then finally, we'll talk about the various options you get, but there's like 40 different repayment plans you get to pick from for private student loans. And so, each one of them come with their own interest rate. Shall we pause there for any eligibility questions, Corey?
Yeah, if you all have any eligibility questions, feel free to put them in the chat or the Q&A, and I'm happy to answer those. Most of these have been coming through the chat, so
Okay.
wherever you all feel comfortable putting those. I also had put my meeting link in there as a response to someone else who was looking to book one-on-one time. I can re-put that in there for anyone else who needs that. So feel free to book time with me if you all want to talk one-on-one. A link will be later in the presentation, but I went ahead and put it in the chat as well when someone asked for it.
Awesome. Thank you. Um, cool. So from a timeline perspective, this is, let's say you're enrolling in August 2026, and let's say you are, enrolled through January 2029, and you graduate around January 2029, right? Usually there's what's called a grace period following the loans. For the federal loans, it's 6 months. Um, for the private loans, it depends on the lender. It could be anywhere between 6 to 12 months. And we don't have anything about residency here, Corey, but a lot of lenders do have additional deferment available if you're doing certain residency programs. Okay.
Yes.
So after all of that is done, that's really usually when full repayment starts. Now, I'll caveat this that during this period, we call it the deferment period, while you're in school, plus potentially any residency deferment, plus this grace period after graduation. All of this is called sort of your deferment period. And you want to be careful because every lender comes up with their own repayment plans, right? So the information I'm sharing now is sort of generally what we see in the industry, but there are deviations from it. Okay. Um, Many lenders will offer four different types of repayment plans. The first one is called deferred. Deferred basically means you don't have any payments due while you're in school during that deferment period, right? The first payment that's required is after everything is said and done and you are, fully graduated past residency. Um, Fixed is you have a small payment due every month. Usually it's something like $25 a month or $50 a month. Okay. And finally, interest only, you're paying off all of the interest that's accruing on the loan each month, right? So if you have a, say, $100,000 loan, really large number, but easy for math, right? Let's say you have a $100,000 loan, a 12% interest rate. So something like $1,000 is accruing each month. Then every month you're paying off $1,000. Okay. Um, then finally, the immediate repayment plan. There is all of this deferment period concept goes away, and it's directly you start full monthly payments, a little bit of principal and all of the interest each month, equal monthly payments, counting 20 years. So, and the 20 years is just an example. There are many different choices you get in terms of the loan term that you can pick from. What I'll add is that whatever repayment plan you select, you're essentially picking the slowest that you're committing to paying back the loan. You can always pay it back faster. And if you pay it back faster, you're going to pay less interest over the life of the loan. But whatever repayment plan you select when you're signing up for the loan, that's sort of the slowest you can pay it. Because if you I'm using the word slow sort of generally, the terms get pretty specific. But if you try to pay slower than that, you're basically either late or, very late and then going towards default, right? So you want to be thoughtful about the repayment plan you select and ensure you're comfortable with the monthly payments that you might be signing up for. Okay.
There was one quick question there. Just said, if we plan on doing residency, do we talk with the loan lender after graduation to figure out the payments?
No, you talk to them before you take the loan from them, right? Or you talk to us. Basically, if you go on the Juno website, we actually are very explicit. We'll show you every lender's policy, so you know upfront what the policy is. But regardless, you can also just email us or email the lender directly and ask them what is their policy for residency deferment, right? And they'll give you that policy. And oftentimes it's something like it has to be a real residency, right? It can't be some random job or something like that. It has to be a real residency. And then someone at the residency, some administrator is going to sign off on the fact that you are in the residency, and that paperwork has to be submitted to the lender, and that's what triggers the deferment. So that's fairly normal, but these are good questions to ask before you sign a loan because policies do vary lender to lender. Unfortunately, not eligible for pharmacy students, I think, but there is one lender out there I know for certain other students. They're doing automatic deferment, which is they're just assuming that you're in residency and not even asking for anything for like 3 or 4 years. But I have not seen that for pharmacy students yet.
There's a question as well about what if they didn't know they want to do residency yet, and they I'll let you take it.
That's okay. Yeah, you don't have to know whether you're going to do residency yet or not. If you are thinking you might, You just want to make sure whatever loan you're taking is compatible with that, right? So usually the way it works is like at the end of your by the time you graduate, right, you usually know whether you're going to do residency or not, and then that's the time you reconnect with your lender, the servicer of the lender, really, to say like, hey, I am going into residency, here's my paperwork, extend the deferment for 1 more year. And it's usually an annual process if you have a 2 year 3 year residency. Yeah. Okay. All right. So what's Juno done, right? We spoke a little bit about that process where we get large groups of students together, then we go to all the banks and try to get interest rates down, try to expand eligibility criteria. So let's just share, our goal is like kind of what we've stated earlier. We want to reduce costs for every, qualifying Juno member. I want to explain what that means because sometimes people interpret that to mean we are trying to create like a single rate for everyone in the group. That's not what we're trying to do. What we are trying to do is for each individual, we want them to find a more affordable option at Juno than they can find for themselves anywhere else. So let's say someone has like an 800 credit score and they're getting like a 6% interest rate outside of Juno, right? We want that person to come to Juno and get a 5% interest rate. And let's say there's someone else who has a 680 credit score and they are getting an 8% interest rate outside of Juno. We want that person to come to Juno and get a 7% interest rate, right? Essentially, we're not trying to cross subsidize, we're trying to reduce rates across the board. Um, Eligibility has been a huge focus for us this year because we've recognized the impact that the federal grad plus not being available is having. And so we focused a ton on trying to ensure that a lot of people will be able to qualify without a cosigner as much as possible. And then, of course, with a cosigner if needed. We think we've cracked the widest eligibility in the market, essentially through a combination of lenders that we've included on the platform. Um, so, you know, obviously each person still has to submit their, we do a soft credit check to figure out, what loan options you might be eligible for. But we think the results are looking pretty decent right now. And then from fees perspective, we always want to make sure that there's no real fees per se. It's just interest that's being charged. And we don't have any lenders that are trying to charge origination fees, application fees, or prepayment fees. These are questions you should ask of any lender. And most lenders today will tell you they do not charge these fees. There might be a handful out there that do. If they do, it's not that you should completely ignore them, but you have to account for those fees when you're evaluating the loan. If you get a really low interest rate from them but the fees are very high, it may not make sense to use that lender. And lastly, rate match guarantee. So this is something really cool we have at Juno, where if you qualify with certain lenders at Juno and you get a better interest rate outside of Juno, that lender through Juno is actually going to give you the same interest rate that you found outside of Juno. Plus, we'll cut you a check for 1% of the loan amount. So, really, it makes it such that it's really hard for you to find a better option outside of Juno, right? Especially from an interest rate perspective. Okay. And there's no cost, we don't charge our students for trying to access the loans we negotiate. We want you to take them. The way we make our money is by charging the lenders a fee based on the total volume that goes to them through Juno. Okay, so if you think you might need a private student loan, scan this QR code, enter your email, create an account. In like a 2-minute process, you can check your rates. And I think we're going to show you some screenshots on what happens in that process. So maybe I'll leave the QR code up, Corey, while we tackle any questions. You might be on mute.
Figured I would do that at least once tonight. Yeah, there's no questions in there right now. If you all have anything, feel free to drop it either Q&A or chat, and just let us know. I don't see the Q&A function, Nikhil, so you may want to check that just to make sure. But if
Yep,
there's anything in
I
the
see
chat,
it. Nothing in the Q&A.
perfect.
Okay. So I'll share a bit about like where the deals have landed, right? That we've negotiated. Essentially, what we are seeing this year is if someone has a FICO that's like 710 or larger, we frequently see the rates they're getting to be a lower interest rate than the federal unsubsidized loans and the federal grad plus loans. Um, if they have a FICO that's less than 710, we frequently see, the federal unsubsidized loan is more affordable. And then if you still have grad plus, you might compare to that, or sort of the in the private market, if you're forced into the private market, the Juno option. One thing I want to be very explicit about is like, even if the interest rate on the private loan is less than your federal unsubsidized loan, that does not mean at all that you should be picking the private loan. The federal student loans have certain protections. Um, Two big ones. One is the public service loan forgiveness program. If you work in nonprofit or if you work directly for a government agency, and two is the income driven repayment plans that many people utilize, right? And these two features are not, I don't know of any private student loan that has those features. So even if you get a more affordable interest rate, I would think twice before selecting a private loan over the federal loan. Okay, and we are happy to chat with you one on one if you want to think through it. This slide is more to talk about interest rates, not to suggest that you should be taking a private loan over a federal loan. Okay, any questions about that? I want to make sure that like that's super clear.
I haven't
Okay,
seen any questions about this slide come through.
awesome. Um, and like I mentioned, if you find a lower rate outside of Juno, just shoot over that lower rate to us. We should be able to get you a match for it, plus 1% of the loan amount as cash back. So it becomes really hard to find a better financial option than Juno for a private student loan. Okay. In terms of what it takes to figure out what rates you get is basically this form, right? So we ask for your personal information, um, your name, date of birth, citizenship status, where you live, where you're going to school, how much you need to borrow, and any employment. If you have any, it's totally fine to put zero if that's the case. Um, Rent, own, and your social security number. When you hit submit on this page, we do a soft credit check. So we are pulling your credit. It's not a hard credit check, so it doesn't hurt your credit, but it is a soft credit check. And then you'll in like usually 30 seconds, you'll see a page that looks like this, right? And so we're gonna show you all the lenders that we found that are likely to approve you, right? This is not a guarantee of approval, but it's a, 99% chance that it works, right? It's relatively few times when we see like we've shown you something, you click apply now, and then you don't get it, right? Um, the APR is shown, if you hover over it, it shows you the interest rate as well. Federal laws require us to show the APR. That's why it's presented the way it is. But when you hover over it, we'll show you the underlying interest rate as well. And then how much you pay while you're in school or in that grace period, plus how much you'll pay per month after graduation. And what benefit did you get from using Juno? Because you could go directly to that lender as well, but then you don't get the Juno benefit. And in most cases, it's a rate discount. Sometimes it's cash back. But whatever the benefit is, we'll disclose that benefit to you. And then finally, the interest over the life of the loan. Okay, so we'll show all of this to you. all of those repayment plans we spoke about, there's filters that you can use to, because when you open the table, there'll be like 40 different options on the page. And it's very helpful to use these filters to kind of reduce the number of options so you can actually compare things and figure out like what makes sense. That's another very common phone call we have is someone reaching out to say like, hey, I did my rate check. I see a lot of options. Can we talk about them? Right? We can't tell you like take this option, it's the best or something like that. That's a very personal decision. But we can at least make sure you know you have good information to understand all of the options and think through that. Okay. Anything else, Corey?
There's one question there, just said for the living situation, so cost of living there, is the student's current situation or where they will be during school?
Great. I usually say everything current, right? At the moment of time. Like if you're living at home with family, great. Put other zero, right? If you are splitting rent with friends, make sure to put rent and put only your portion of the payment. Don't put, if you're living in a $5,000 house, but your portion is 600 bucks, put 600, right? Yeah. Okay. All right. I'll go fast because we only have 8 minutes left. Loan process insights. Like I said, for private student loans, you get a lot of options, right? You could choose a fixed or a variable interest rate. You could choose any one of these loan terms, and you have these four different repayment plans we spoke about. From a fixed versus variable perspective, it kind of sounds like what it is, right? So the fixed rate, the rate that you see and you sign up for, stays the same through the life of the loan. Variable rates, they can move over time up or down based on an index. More recently, we've just been seeing everyone gravitate towards fixed interest rates. We don't see a lot of people gravitating towards variable interest rates. Okay. How to choose your loan term? Typically, what you see is the longer the term, the higher the interest rate is going to be, all else being equal, right? However, you want to pay close attention to the monthly payment, right, after school. Um, and it's not uncommon for us to see someone take a longer loan term with potentially a slightly higher interest rate just to make sure that the monthly payment that they're signing up for is manageable, right? So if you're borrowing, you know, your private borrowing might be like $100,000 um, at the end of the whole program, right? So 2,500 might be very expensive towards that versus 1,200 might be, more manageable, but it comes at the cost of a higher interest rate. Okay. We kind of spoke about this, so I'll skip over this. In terms of popularity, you can see the deferred and the fixed, where you're either not making any payments while you're in school or you're making very small payments while you're in school, tend to be the more popular options. Um, we've spoken about this a few times now, but like rates move. If you know where you're going to school, if you know how much you roughly need to borrow, go ahead and get the loan process done. Um, this just talks about how you may be able to adjust your loan amount. Feel free if you end up in that situation where you need to change your loan amount, shoot us a quick email, hello@joinjuno.com. Our team can guide you on how to make those changes. One thing we often get is like, hey, how do I shop around? Right? Like I've been talking about like checking out Juno, which we encourage you to do, but you should also just check every option under the sun, right? Like why not? And people worry about hard credit checks a ton. That's why I like to share this information. The first hard credit check you do usually has an impact of 0 to 5 points. Okay. A second hard credit check for the same product, right, for a student loan, within a tight window, something like 14 days, right, does it's still a hard credit check. It'll still show up on your credit report, but it usually doesn't further impact your credit score. Okay. Um, and that's specific to FICO. There are different types of credit score. The statement I'm making is specific to FICO. So please check out this link. You can read more about it. But generally speaking, they understand that you're shopping around. They're not going to keep dinging your score just because you're shopping around. All right. Questions, here's Corey's email, rate match, hello@johnjuno.com. If you want to book a meeting with a number of us who are happy to take a call with you one-on-one, use the QR code. Think that's it, right? Okay, I'll stop there. We made it in time.
Perfect, because we have a couple questions that came through. It says, with Juno, if I later have a lower interest rate, so they go back and do another rate check, are they allowed to change the lender or the rate or the loan or any of the above?
As long as the loan hasn't already been dispersed, right, or like a couple of days before disbursement. This technically depends on a lender by lender policy, but most lenders will allow you to cancel a loan right up to the point of disbursement or like 1 or 2 days before disbursement, right? And so you might ask, okay, when does disbursement happen? That's decided by your school's financial aid office. So every school's financial aid office will tell the lender, hey, this is the date on which the funds should be dispersed. So you have to reach out to your school to find out like what's that date for your school. It's not unusual for it to be right around the tuition due date or right around when classes start, but that's um, yeah, that up to that point you usually have the ability to cancel and switch to a different lender at Juno or outside of Juno. It doesn't matter. Yeah, Juno is not a
Perfect.
lender, right? Juno just helps you get to a lender that's attractive. Yeah.
Somebody asked if we're doing another session like this. We do sessions quite often, and they go out to our audience. So if you scan that QR code and sign up for the group, we can get you on our list. And Danielle and her team, I know they run lots of webinars as well. So we're always happy to talk with students. If you want to book time with me about this, you know someone else who may find this appealing, have them reach out to me. However you all want to do it, we're happy to help.
And the recording for this session will also be on the pharmacies right from a YouTube. I'll send a follow-up email to everyone who registered afterwards to share the link to that, and then the slides will also be there. We have about 2 minutes left. Does anyone have any other questions that they'd like to put in the chat or the Q&A?
I also see our audience count dropping, so that might be our cue.
Yeah. No, and I mean, if you all do have any other questions that you might think of, after the session, as that does sometimes happen, you can always reach out to the Juno team. Thank you for putting the contact information up again. And again, I'll share all that information in the follow-up email as well. There will be a short survey that'll pop up right after this. Please fill that out and let us know how you enjoyed the session so we can make any improvements for future ones. But it looks like everyone is very grateful for the information that you all shared. And so I just want to extend my thank you to you both as well. And with that, I think we'll close for tonight. So thank you both for that great presentation. Thank you for those who attended. And I hope you all have a great evening.
Thank you for having us.
Thank you all.